So you're the founder CEO of Evidence, right? SFC license, digital asset provider here in Hong Kong. Well, let's talk a little bit about the other industries, right? RWA. I think you and I've been talking about tokenizing real-world assets for what, ever since we knew each other.
Yes.
And I think it's now the term that RWA and all of these things are coming up, and obviously a lot of institutions are getting into the game. So how do you look at this whole industry in terms of one, do you really need to tokenize these RWAs? And when you tokenize them, what do you actually get out of it? What's your point of view?
First of all, back to economics. Taxonomy matters, right? So nomenclature matters. And once you know or you agree, what is our definition of RWA? Then you can debate it. So to me, the whole term has had its own history. It originally started with this clear delineation between, okay, we have crypto on this side, and then we have real world financial.
Things that have collateral, right?
Which is not true anymore. Maybe it was never, but definitely now you can say crypto is part of the real world in financial assets. It arrives in the real world financial assets. So the way I define real world assets today is assets that are either are or are building the real world around them. So that can be companies, investing in private equity, venture capital. There can be infrastructure.
Right. In a place like Hong Kong, real estate, right? Potentially.
Keeps the world moving. Real estate, so physical assets, real estate, collectibles, etc. Can also be, lending to companies, etc. So the broader alternative assets, private market space, to me, is what real world assets are. And here, back to your question one, you could argue in this specific space, we have not seen any innovation for decades, how we transact and how we keep records. If I invest into a private company today, it's still paper-based, file-based.
Of course.
Everyone has their own system. It takes weeks. Good case, months. In the bad case, a lot of money for each transaction. So it just locks a lot of people out of that space. And you use the word democratization. I don't particularly like it, but sort of opening up this asset class to more investors that benefits for both sides. The investors get access and exposure to what I look at as really companies that build the future, projects that help build the future. And with these companies and projects, they get capital. And it's not just limited to institutions, but also it's not open, let's say, private wealth investors.